Which way is the economy going? Is it going up? Is it going down? It's important to know that direction because that will assist you in the stocks that you want to purchase. All of the 7,000 stocks in North America are allocated to 11 particular sectors. Some of those sectors do better in a strong economic market, and some of them are defensive choices that position you well when the economy is slowing. Hi, I'm Kelly Frank, author of To the Moon Investing. This book is there for you to help you to invest and explains the concepts of the marketplace in a very simple format. It comes with some visual maps that assist you in making your stock selection choices. I've come up with 7 indicators that can tell you if the market, or actually if the economy, is going to be strong or weak. And all of the 7 indicators can be readily sourced on the internet in less than 5 minutes. If you can draw a line, you can follow my map and give yourself the confidence that you're moving into a sector that is aligned with the economic direction. Because if you go golfing, you want to know, which way is the wind going? If you're going to fly a plane, what way is that windsock going? That's exactly what the visual map provides you as a precursor to your stock selection. There are, again, 7 indicators. One of them is subjective, 6 are objective and derived from data that I mostly obtained from the US Federal Reserve of St. Louis. They have an incredible treasure trove of information that is free, and they're also a really helpful bunch if you have to send them the odd question. So what are the 7 indicators? Number 1, the subjective one, the presidential approval rate. If it's below 50%, I consider that not a good thing for the economy, in the sense that when people feel confident in their government, they're spending more money, there's liquidity in the economy, and that's a good thing. So that's the first thing I show in my one-page map. My second and third indicators are driven by the Federal Reserve. Now, the Federal Reserve, as most of you know, is that department of the US federal government that's in charge of monetary policy. And they influence 2 indicators through their particular efforts. The first one is the CPI, or Consumer Price Index, which is the measurement of the change in a basket of goods for that particular month as compared to the same month a year previous. The third indicator is the unemployment rate. Obviously, a lower unemployment rate is better for the economy than a higher unemployment rate. That particular rate, just like the CPI, comes from the Bureau of Labor Statistics. Again, a few keystrokes, you've got the information. The fourth indicator comes from the Bureau of Economics Analysis, and it's released every quarter. It shows the change in gross domestic product, which is the value of all goods and services produced in the country as compared to the previous quarter. They take that number and they annualize it, and then you can see, is it increasing or decreasing vis-a-vis the previous quarter. The fourth indicator is the difference in the 10-year Treasury and 2-year Treasury rates. That sounds a bit complicated. It's not. It's simply this. If the 10-year rate minus the 2-year rate yield is negative, that's a bad thing, and it usually portends a recession. And honestly, we've had a negative, what's called an inverted curve, for several months now, but the economy is still doing pretty good. The next indicator is one that we hear every day, and that is the price of a barrel of oil. And the last indicator is the Chinese Purchase Managers Index. That comes from Moody's, the China PMI. And the reason why that's important is particularly that the Chinese economy is the world's second largest economy, but also the massive amount of trade between the United States and China. All of these 7 indicators are shown on a one-page map with sweet spots, and you literally get the information, pull a line through the sweet spots, and then say, generally, you know what? The economy is pretty good right now, or it's kind of in between, or it's poor. And the indicators right now, as of today, January 5th, show that the economy's pretty good, not great, but 4 of the 7 indicators are above the neutral line. I just want to emphasize that this seizing or grabbing of information is so easy. Honestly, after you do it for a couple months, you'll be able to get all that 7 indicator information in less than probably 3 minutes. But it's that simple, and it really gives you a sense of where the economy is at. All of the terms are well explained on the internet, and of course they're explained in my book. So I want you to live long, ascend with joy, and prosper. Thank you.